All right, so today we took another trade and we've been hitting like crazy this past week. I just haven't been able to record because I be forgetting, but it's the same system, same method as I always preach on my videos. So if you haven't watched any of my videos, you go watch. I literally talk about the same thing in every video, and it's probably one of the easiest systems that I've ever traded when it comes to trading. I've traded up support and resistance and all this other bullshit EMAs, but this right here is very simple and it's very consistent. It's been very consistent for me. Okay, but let me show you guys a trade that I actually took. So it was this one right here, and if you know me, when I trade zero DT, bro, I'm in and out. I'm in and out because all that the Greeks fucking my shit up, the theta or whatever they call it. I'm not holding on to trades long. So here was a trade that I took. It was this one right here. So as you can see, it rejected off of a demand zone and then it just came up and then boom, hit my target. It was a very quick trade. It was a very heavy trade. I put a good amount of money into this one and don't wanna tell you guys how much I put in. I want you guys to learn the sauce. And then maybe in the future then I'll be posting up my how much I've been making. But I want you guys to really learn the sauce. So that was a trade that I took yesterday. And if I'm not mistaken, I think I can show you guys a trade. I think I took a trade on yeah, it was here on AMD. Was this yesterday? This was yesterday. I don't have the zone set up and everything, but I can probably go over that soon. Let's go over the trade today though, so I can show you guys exactly what I saw when I took it. So, okay, so first thing is first, like I always tell you guys in all my videos, is supply zones in the start structure. Okay, what is market structure doing? Okay, so in this case market structure is bullish, okay, because the market opened at 9:30. So if we're going to go back in time around here, structure was bullish. Okay, as you can see on the 15-minute it was bullish. So right here I would obviously know that market structure is bullish. So what I'm looking for is I'm looking for calls. Okay, so calls is ideally what I'm looking for. So if I'm looking for calls, I'm looking to enter off of a demand zone. So I would put for the zone S&D, I would put a demand zone. Okay, so demand zone. So now all I would have to do after I find the demand zone is wait for an entry. Okay, so let's look for the demand zone. If we look at this on the 15-minute, the demand zone is obviously this one right here because we have the candlestick before the impulse move up. Let me see. I thought someone was robbing me, but we have the break of structure right there. So this is obviously a valid demand zone. Candlestick for impulse move up, cause that break of structure, so that's valid. So now all we would have to do is wait for entry, entry model. So all I would have to do now is wait for price to tap into my zone. So I would go on to the 1 minute and wait for that to happen. And that's exactly what I did. Now, of course, this is a very huge zone. So for me, I like to wait until I get that. I guess I wouldn't say confirmation, but I would wait until I get some sign that the markets are ready to stop selling and start buying. Okay. So as you can see, that's what I did. And as you can see, I didn't get in on this one. I got in on the next one right here. Yeah, so I got in around here before the candlestick closed because this candlestick right here gave me that confirmation. This very bullish candlestick gave me that confirmation that it wanted to start buying. Like we were no longer selling and we wanted to start buying. So this is the confirmation that I got was this candlestick right here. So I just waited and then I got in right before this closed. So it was somewhere around here. And then as you can see, just came up one, two, three, literally like three candlesticks. So like that was like 3 minutes, and I was already out of the trade. I was already out of the trade. It did come up a little bit more, and then it just reversed. Now this was zero DTE. So the thing when it comes to zero DTE, I do not like holding trades too long. I don't like holding trades too long in general, but I really do not like holding trades long when it comes to zero DTE. And the reason for that is because when I hold trades for too long on zero DTE, I could be right, but there's no point in holding a trade long because of all the consolidation. It burns my contract out. So what I mean is, if my price target, let's say my price target was right here, right? Or let's go back right here. So this is my price target, right? Right there. We could literally do something like this, come back up, And by the time price was right here, we were probably like, let's just say $100. By the time we're all the way back up here, all the way up here, we're up like $80. There's no point. I might as well get out right here or get out right here before all that consolidation, and then it goes up even higher, but I'm making less. You know what I'm saying? Or it even stops me out because all that consolidation, then it stops me out. Now I lost even more than I was planning to lose. So that's why when it comes to zero DT, I don't like holding trades longer. But boom, now it hit my target, and that was basically it. What I did was I waited for the confirmation entry. So I no a candle close entry. So I waited for this candlestick to close, and then that's when I took my entry on the next candlestick. So I have a video on my entry models. You can go watch this on my channel. I have a video on my entry models. But yeah, that's basically what I did, and that was it. That was the trade, and I used these three things. I used structure. I identified structure. After I identified structure, I identified if I looked for supply and demand zone, mostly a demand zone because I'm not trading supply zones in a bullish market. So a demand zone, I found one, and then entry model. That was literally the last step. And after that, I took my trade and my trade hit, and boom, I go on about my day. It's literally that simple. Like it's that simple. I'm not looking for too many things, nor do I care what people are saying on Twitter or what's going on in the news. I wake up, look for these three things, and then if I see them, I take the trade. If I don't, then I go on about my day. Like there's days where I won't trade because I don't see a good setup. It like literally, yeah, literally. But yeah, and if we look at this, look what ends up happening afterwards. Boom, it goes up, it goes crazy. And you know the crazy part is that I was looking to enter off of a re-entry right here, like off of a confirmation entry right here. Because we see we have this candlestick cause this demand zone, cause that break, but we never got the good rejection. So then at this point, I didn't take the trade because I'm like, man, there's no good rejection. Fuck that. But the crazy part is, you know, the crazy part is that if I would have just waited, I would have saw this. Look at this. We came back down. We dropped even deeper. We started reacting. And then look at this candlestick, bro. This right here, I'm not even going to lie, would have been a perfect entry. This one right here, getting in right after this candlestick closes. Boom. That's the bottom. Here's the zone. Bro, that right there is amazing trade. This right here would have been the best trade, right? If like this is a very good trade. And it's the same thing. It's literally the same method that I use, the same strategy. Market structure, demand zone, entry. It's literally it. And one thing that people always ask me, because people say, well, how do you know when it's going to reject, or how do you know what direction market is going to go in? I don't know what direction the market is going to go in. All I'm doing is I'm rejecting when it taps into very, very pivotal points or very, very pivotal zones. So in this case, a pivotal zone would be this one right here. This right here, this demand zone is a pivotal zone because last time we were in this area, there was a lot of buyers. So if I go on to the 15, last time we were in this area, there was a lot of buyers that came in, right? So I know if it taps into that area again, there's a high likelihood that the buyers are going to step in again. So once it does tap in, then all I'm looking for is some sort of reaction or sign that this doesn't want to drop anymore, that this wants to come up. Because we have structure on our side. So structure is bullish. So we know structure is on our side. Also, if we get a good reaction, no. Okay. Well, first, let's do it like this. We have structure on our side, which that's already a good thing. We have a zone where there's a lot of buyers. That's already a good thing as well. And then now once we tap into that zone where there's a lot of buyers, we get a lot of rejection. So this is telling me that it's ready to just start going up to the upside. It's ready to go in the direction it was planning on going in. So this is exactly why I entered right here. As you can see, I entered right here because this was telling me, okay, look, it looks like we want to start buying. And then that's exactly what it did. But this was obviously the boy better entry. But this is exactly what it did. You know what I'm saying? Like it's not that crazy. And I'm not trying to predict anything. Everything that I'm doing right here is reacting. I'm literally just reacting to what the market is giving me. If I tried to predict, I could have made so many predictions. I could have made crazy predictions on what the market was going to do. You know, I could have said, "Oh, look, it looks like we're dropping, so we're going to drop." You know, I could have made a whole bunch of crazy predictions. I could have said, "Oh, we've been buying too much. We're going to start dropping." Like I could have made that prediction, or I could have said, "Oh, we're going to start buying. Let me just get in right off the rip." Right? So like right here, let's say I'm like, okay, I'm guessing the market's gonna go up, right? So let's say 9:30. Let's say right here, 9:30 opens up, and I'm like, you know what? We're gonna start buying. Fuck that. Let me just start entering this trade. And you enter right here, and your stop loss is this right here. You get stopped out, and then the trade reverses on you, or we're all the way up here, and you're like, oh no no, we're gonna start buying, and you have no good entry model. You're gonna get stopped out, all because you're trading off of speculation. You're not trading off of reaction. When you trade off of reaction, then you get better entries. You don't get the perfect entries, but you get better entries. So let me go and show you guys a trade that I took yesterday, and this is on AMD. Now, this was a trade that I was looking at, but like I said, it never. Wait, no, no. This happened like right at the same time SPY happened, but for some reason, I was like, man, SPY looks way better, so I never took this trade. And then as you can see, obviously ended up just going to the downside. But here's the trade that I took. I think this was yesterday, if I'm not mistaken. I'd be forgetting, honestly. Let's see. Boom, it was this trade right here. So as you can see, okay, boom. And this was off of a 1 hour, if I'm not mistaken. Okay, boom. 1 hour demand, I think. Oh no, 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 no. Well, it was off of a 1 hour demand, but this one's way too big because it would be something like this. So that's why I had it right there. Okay, but let me show you guys the trade. So whenever like, let's see. Okay, 5 minute. Okay, so let's go to the 1 minute. So this was at 9:30, and this was actually the trade that I should have taken. This was a very good trade, but it was like right at market open, so it was a little sketchy. But okay, so here, as you can see, I'm using a demand zone off the 1 hour. Now, this can be a little bit tricky because the 1 hour, I like using demand zones off of the 1 hour because, well, I don't like using them because it can be a little tricky because they're so big, pause, that it's hard to get a good accurate entry on it. So I like going off of like lower ones, like 15. But right here, you can say, oh, there's a 15-minute demand zone, but that's past structure. Well, I'm looking at structure. I'm looking at structure now, and as you can see, 15-minute structure right here was bearish. Okay, 5 minute structure right here, it was bearish as well. But here's the thing that really caught my attention. We're bearish on the 5 minute, but then what do? We have a shift in structure. So we have a market structure shift right here at 9:30. So we shift the direction the market is going in. And what I'm thinking at this point is I'm thinking it's crazy that we have a market structure shift inside of a demand zone on the 1 hour. So what this is telling me is that the demand zone is somewhat valid. Okay. So once it taps in again, I said to myself, let me look for some sort of entry on this demand zone because it's looking like it wants to reject. It rejected once, which is a good thing. So I know that this is a valid demand zone, but will it reject twice? That's the tricky part. So, and it obviously did. But the thing is that for me to even get a good entry on this, I'd have to, no, for me to even take this trade, it has to be a very good entry. So what I did was I waited for buyers to step in again right here. As you can see, boom, boom, boom. We dropped. And then once this candlestick was looking like this, because it was very bullish, before it closed, that's when I entered because I didn't want to enter too late. So then I entered, and then I had to move my stop loss like right here. So I was risking a little bit more than I usually am, but I was like I was adamant that this was gonna actually reject. I was adamant that this was gonna reject, and that's exactly what it did. That's exactly what it did. It came down a little bit, started selling off, but then buying pressure came back in, and then it started doing this, playing around, and then it finally tapped into my area, which was liquidity, which was right here. So it did what I wanted to, and it did using the three things that I told you. Structure, number one, and we're going based off of 5 minute structure because structure on the 5 minute is bullish now because we had that shift. Okay, so structure on the 5 minute, and then also we go to the zone. There's a demand zone right here that's valid because once it tapped in, it had a shift, and also there was a lot of buying pressure, so we know that that's valid. and then the entry model was just waiting for that rejection. So a reaction entry, waiting for the candlestick to give me a good reaction, waiting for it to give me a good reaction, and this candlestick gave me the reaction that I wanted, and then I entered. I guess you could say it wasn't the perfect entry, but when it comes to this game of trading, you can't always take that perfect entry. So took that trade right there, and that was basically it, man. Like that was basically it. But you see, my trading style was very simple. So if you're somebody who likes to trade simple, then I'd recommend you checking out my videos because it's very simple trading, man. It really is. And other than that, that is basically it. It's Friday, so I'm probably just gonna chill, and then once Monday comes, hop back onto the markets. Other than that, that is it. And y'all go like the video, man.